Hello and welcome everybody to the Gold and Silver Club Commodity Markets Outlook for the 7th of April 2016, presented by myself, Phil Carr, at the Gold and Silver Club. So today we will be analysing the latest developments in the commodity markets. We'll be discussing our outlook for the week ahead. The live session will be covering an overview of the commodity markets. We'll cover the top trades of the week, live market commentary, trading ideas for the week ahead, and of course we'll be answering your questions during the course of today's session as well. So just before we get started and we start to have a look at the charts, let me introduce you to the Gold and Silver Club. So Gold and Silver Club is the world's #1 commodities trading and investment coaching company. We're regarded as the go-to authority on commodities trading, and as internationally respected experts, our analysis and our opinions on the metals, the energies and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, Global Banking and Finance Review, the Wall Street Journal, and of course, it's a pleasure to be here on FX Street as well. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth, generate substantial monthly income through commodities using our signature trading strategies. So for more information on the Gold and Silver Club and our expertise, please do go ahead and visit our website, which is www.thegoldandsilverclub.com. Okay, good. Right, so let's have a look at the price of gold. Gold is currently trading at $1,234 US per ounce. So we'll take a look at that very shortly on the charts. We've seen a bit of a breakout to the upside after the minutes from the FOMC yesterday, which I'll talk you through very shortly as well. The top trades of the week using the Gold and Silver Club signature trading strategies have been as follows. So first of all, we had a lovely sell short opportunity on sugar after it was really overdue a correction, a healthy correction here, nice V-shaped reversal pattern, and we took this off the back of a precision setup as well. So over 120 points return for a nice breakdown. In fact, sugar at the moment, yes, hovering around the 1460 level right now, 1460. So still sitting around those levels at the moment. So it's been a nice sell opportunity there on sugar. Palladium also gave us a nice sell opportunity off the back of the non-farm payrolls on Friday. We saw a good breakdown, a short-term breakdown on gold where it moved about 130 points to the downside, and we also took a palladium trade for 240 points profit as it broke down to its next key level of support. And light sweet crude oil, we took a nice trade on this also on Friday, just before the non-farm payrolls. Actually, we triggered into this trade and we came out just shy of a major level of support here. You can see where it just broke down 210 points profit, hit our profit target. And at the moment, we're currently flat on oil. So we'll show you what we're looking at in the charts as we head into the US session this afternoon. So we'll bring, first of all, let's just go over to we'll have a look at gold first, and then we can just bring it over and have a look at the energies and also the agriculture markets. As always, if there are any questions or comments, do please post those into the chat. So what I'll do, I'll just bring gold out on the monthly chart. We've now come towards the, of course, we finished the end of March last week. So we've now got the monthly charts, which we can look at for the higher time frames here. So what you'll note on the monthly chart that we did close with a doji, which is indecision over the month of March here. So gold's still trying to really work its way out of this current consolidation. So throughout most of March, after the huge move over January and February, so gold produced a 16% move to the upside over the first quarter of the year, which is the largest move on gold since 1986. So it's the biggest gain that we've had over a quarter in 30 years on gold. So it's been a very good move. Over the month of March, really gold consolidated throughout most of March there. It's created a doji. Essentially, if we break the lows of that monthly chart, we'll be looking for more downside, a rotation lower, and a further correction. If we were to break above last month's highs here, which is sitting around the 1283 level, that would definitely start to push higher here, and we could be due the second large leg up here on gold at the moment. So we're watching gold very closely. It's not really done too much over the last week or so. Non-farm payrolls, initially gold did break down, had quite a nice little sell short opportunity actually initially off the non-farm payrolls here. We broke down, we came up to the upper end of the resistance channel beforehand, we broke back down, came back down to a key level of support, key moving average, and you can see we've just been sat around that moving average all week. We did actually penetrate the resistance level overnight here. The FOMC minutes, we didn't see too much of a move initially until overnight here during the Asia Pacific session. We've seen a nice move to the upside here, a breakout back towards key resistance, but it's not really confirmed yet unless we close above that resistance channel. There's still a lot of overhead resistance sitting between $1,240 up to $1,250 per ounce. There's quite a key level of resistance there. So if it can't follow through for gold and we start to rotate lower again, there could be, again, a short-term opportunity here for a sell if it was to break below key support. At the moment, that key support level which needs to break is sitting at 12.16. If that can break and we get a close below that, that could really start to lend a move towards the lower end of this trend channel. Now, in terms of the minutes of the FOMC yesterday from the Federal Reserve policy meeting, they showed caution over US interest rates, and we saw the dollar slump on that yesterday to fresh 17-month lows against the yen. So we did see a breakdown again. We'll have a look at the US dollar shortly. Minutes from the Fed's March the 15th to 16th policy meeting released on Wednesday. They show policymakers debated whether an interest rate hike would be needed in April, although the consensus emerged that risks from a global economic slowdown warranted a cautious approach. So with that, essentially gold has risen 16% so far this quarter on speculation that the Fed may go ahead and delay rate hikes, and that has really been the stimulus here to see this breakout to the upside with gold overnight. So we can see we've had a bit of a follow through move there to the upside. I would still say at the moment it's neutral on gold, and really until we fully break out and close above this downward trending resistance channel at the moment. I would note though that we saw assets in the SPDR Gold Trust, the world's largest gold-backed exchange-traded fund. They rose by 0.51% to 819 tons yesterday, the first inflow in nearly 2 weeks. Okay, so that again, that's showing you where the institutional money is going, money managers, hedge funds, and we've seen more inflows into that, which often does coincide with the breakout on gold. We've saw a bit of a breakout overnight here. We need a little bit more follow through. I would say the overall picture at the moment, it's starting to get more bullish. It's still got more work to do here to really confirm a buy right now, but it is in favor in the short term of the bulls whilst we break above that trend channel, which you can see on the chart. We've also been monitoring the potential for a head and shoulders pattern for quite a while now on gold. It does seem to be managing to break out of that pattern at the moment. You can see where we had the left shoulder, the head there, the right shoulder. That was all looking pretty good right up until Monday, actually. And after the non-farm payrolls on Friday, we broke down. We stayed contained within this formation. However, we're starting to break out of it now. You can see we're breaking out of the potential right shoulder, which was forming for a neckline to develop a head and shoulders pattern. So with that said, I would look also to the weekly charts here as well. We've got quite a lot of overhead resistance still. You've got this rolling over formation on the weekly chart here for gold, which I'm also keeping an eye on. So ultimately, if you still continue not to break above last week's highs here, you can see we've got a V-shaped reversal pattern developing, and it could start to roll over. These formations where the market rolls over, they take a fair amount of time to develop. It can be anywhere from a month to 2 months. We're so far about 8 weeks into this since we broke out to the highs here, going back to the end of January and beginning of February. We've really been forming this sort of rolling over formation. So be keeping a very close eye on whether we can breach above last week's highs. If we do manage to breach above that level, we could start to see the second leg up here on gold, and we'll certainly get very interested in that trading opportunity if we get a break. I would say above key resistance here, you can see 1240 to 1245. A break and close above that level would lend us to a buying opportunity here on gold. So definitely have it on your radar. It is getting there. It's starting to get a move on, particularly with the US dollar, the breakdown on the US dollar. Although note the US dollar has come into major support, and interestingly, it's produced a rejection candle so far. So overnight, during the US session, we did see a breakdown of the US dollar, came down, tested 93, 98 there. You come into a major level of support on the chart here. You've had quite a few retests of this level. It's about the 5th retest over the last year and a half at this major level of support. You've also got a downward trending channel. I've put on the most relevant channels that I would utilize at the moment. You might have a few extra channels on there, which is no problem. But right now, I do see some support around this zone. You can see typically the US dollar has snapped back from this area. So as such, I really think we need to see how the markets move over the course of the US session today. Janet Yellen is speaking again this evening as well. So she could have a more impact on the US dollar and also the metals, no doubt, too. So I would also keep a very close eye on that as we head into the US session today. You can see the price structure is getting tighter and tighter here at the moment. It could give rise to a breakout trade there if that is a falling wedge pattern that we're getting there at the moment. It could give rise to a significant breakout, which would put pressure on the metals here. Silver's not really doing too much at the moment. If we have a look at silver, the overall price structure, you can see we've still got quite a lot of, it's not really managed to get a proper move on here, although it has created a high swing low. It did well on Friday's non-farm payroll, although, well, it broke down, but we did see a supportive close in it. It closed back with a higher swing low on the chart and is consolidated this week. So ultimately, silver at the moment has got some underlying support. You can see where it is forming high swing lows, high swing highs on the chart. Need a little bit more of a resolution, waiting really to see if silver can start to get a move on here. There are some key resistance levels overhead silver does need to break above in order to really get us interested in a swing trade at the moment. Monitoring silver, if it was to break and close below its swing low here at 1475, I would definitely see a further correction on the cards down to the 1459 level here, which you've got identified on the chart. But for now, neutral on silver until we get a bit more confirmation at the moment. Platinum also broke down, as well as palladium, since the non-farm payrolls on Friday. Platinum sitting around two levels, two very key moving averages. And also you've got these potential for a bull flag formation. So where you got this pullback, you can see previously where we pulled back and then we broke out to the upside. So it could be that we're starting to we're consolidating before the next leg up here. So I am watching out for that. Again, if we broke and closed below major support here, that would indicate a larger correction here. Below the 930 level, we'd be looking for more downside and potential to get into platinum for a sell short. So I think really we need a little bit more resolution. I think traders will be waiting for comments from Janet Yellen later on this evening as well. If we have a look and we go over to the oil market, we caught a nice move on oil from non-farm payroll up until the beginning of this week on Tuesday, prior to Wednesday's oil inventory. So we came down, we had a really nice technical trade here, as well as fundamentally a very sound trade. 4% move to the downside that we got on Friday, which we caught, and also a further move down to the weekly pivot. We got 210 points on this move. So ultimately we just had a nice breakdown. We just broke down to this, you can see where we broke down to key level of support, moving average as well. And at that level we took profits, but then since then we've seen a rotation back up here. Ultimately on oil at the moment, you've got a mixture of different data which is affecting the market right now. So we had on Wednesday oil inventories which came in much less than expected, which immediately gave us a bullish move to the upside. We saw a breakout on that, whereas previously we'd seen record high levels of inventories in the previous week. So this week was a bit of a surprise to see a reduction in crude inventories, and we saw a breakout to the upside. But overall today we haven't seen such a big follow through, mainly due to news which has come out just regarding an increase in exports from Iraq underlying the global supply. So that's come out this morning as headline news. Iraq was OPEC's fastest growing source of supply in 2015. So that has caused some support, well actually not so much support, it's caused some resistance here at the moment on the chart, where previous support could be turning into resistance. So you can see here this supported bounce that we had previously. If we close with a rejection candle today on you can see light sweet crude oil here, I would be anticipating a rollover. So we could just see you've got this quite clear downward trending channel. Oil does like to move between these sort of channels, so we could see just a rotation lower. For me, need a little bit more time here. I need it to fully form over the course of the US session today. It is at a point here where it could either bit like gold, it could either break out and follow through and be the next leg up here. That will get traders interested in a buy, or if it forms a rejection candle here and we close with a rejection candle, we've got the potential to rotate back down towards the lower end of this channel. So keeping an eye on fundamentals on that. We've got the Baker Hughes coming out tomorrow as well, which will be important. The US oil rig count, which will be another important data. And also, of course, we have the meeting on the 17th of April among the world's largest oil producers about the production freeze, which will probably be the biggest catalyst here coming up in the next 10 days now for the next major move here on oil. So there's a lot of speculation regarding that meeting. So right now for oil, with flat oil at the moment, we took a nice sell short at the beginning, well, actually on Friday, which followed through at the beginning of this week. We've now banked profits on that trade, so we're waiting for the next setup. At the moment, we may get one by the end of today, so I'm keeping an eye on that. Brent crude oil, same situation, same trend channels as well. You've got this nice overhead resistance channel here. Again, you can join some additional channels as well. You could also join some support channels here just to more just relevant on light sweet crude oil. Let me just draw that in just to show you there. You have got some also supportive channels here too. So you've got a bit of a pennant formation ultimately developing, but you can see where we come up to resistance, some overhead resistance here with on the pivots, and also you've got moving averages which are providing resistance here. So again, very curious to see whether we'll have a setup by the close today on oil. Also monitoring the equities very closely here as well. So if we just have a look, we can just move it over and have a look at, for example, we can have a look at the S&P 500, and you can see the S&P 500, it did actually start to break down prior to the minutes of the FOMC yesterday. It was looking a bit ropey, like we could start to break down. Then we saw a push back to resistance. We closed with a bullish engulfing candle, closed right at the daily high yesterday on the S&P 500 after the minutes of the FOMC. This really got going actually in the last couple of hours yesterday, but today it's not really followed through. You've got overhead resistance here. I still see the potential for equities to roll over, and if they do, then I would expect oil to do the same here as well, but you do have underlying support as well. So this will take a while as well to get some sort of confirmation. We could, of course, if we break above the weekly highs here, then we're really going to be having the next leg up here. At the moment, we've managed to on the S&P 500, it's retraced all of its losses so far in 2016, so it's been a impressive move to the upside. Again, if we do see equities break down today and oil break down, I would expect that to be supportive for gold and vice versa. So we're just looking for where the capital inflows are going at the moment. Very interested to see the CFTC reports tomorrow as well to get a better idea of where we're seeing institutional money get positioned as we close into the week too. But right now, just waiting really for confirmation on oil and also the stock markets here as well to give us some confirmation as to the next move here, and gold too, which we could see a nice breakout over the course of the US session today. We'll be monitoring that, or it might not come until this evening when Janet Yellen is due to speak. Also, if we go over to the grains complex, we've had some nice trades on this over this week. First of all, corn, which we took after USDA reports last week. We saw corn really sold off significantly after that USDA report. Ultimately, it looks like the most bearish scenario at the moment in corn has already been priced in. US corn futures were on track for their biggest weekly loss in 8 months on Friday, and Thursday and Friday actually, after last week, after they were weighed down by US government forecasts of 2016 planted acreage well above market expectations. So that came in. We saw a knee-jerk reaction. What is interesting to note was on corn is the CFTC reports were showing us that there was a record number of net shorts in this market. So whenever you get to that very high level where there's a record number of longs or sell shorts in the market, often that's followed by some sort of capitulation afterwards. And we got that. Obviously, the sort of ideal bear scenario did play out. So all of those sellers who were selling into corn, they did manage to benefit from this big move to the downside, which occurred on the USDA reports. That was definitely helped by the amount of institutional money in this sell. So we saw quite a significant move, the biggest sell-off that we've actually seen in corn here for 8 months. However, the most bearish scenario has been priced in, and now we're starting to see some revisions of the acreage there, and also what hasn't been taken into account there is damage to crops, which can occur due to weather and so forth. So really at the moment we've seen a nice little retracement on corn. We did get in off this right at the lower end of the support channel, so we're currently in corn in profit. It was a lovely bounce off this support level, nice rejection candle that's followed through this week. So ultimately we're long corn right now. Did like that for a buy opportunity. We see some potential to rotate back towards the upper end of that channel as well. But even if we don't, we're already in good profits on this trade, so we're continuing to monitor that at the moment. Soybeans also, if we go over to soy had a decent move after the USDA report. So ultimately, soybeans climbed to their highest levels since mid-October, rising for a fifth consecutive week with lower than expected acreage supporting prices. So on the USDA report, initial knee-jerk reaction for a sell-off, then a nice breakout to the upside. We've rotated back down, probably some profit taking here as well after we got back up to key resistance here. You can see here where we just come back up to key resistance on the chart. Soybeans, I would ideally like to get in a better entry here for our next buy, so we can rotate a little bit more here back to previous resistance. If that turns to support around the 890 level, that could springboard off for higher prices, or if we close back above yesterday's high yesterday, that could be just we might already have the new short-term low in if we start to build up some price structure. So keeping an eye on the grains here and any revisions as well from the USDA report too, so keeping a very close eye on that. Wheat as well. Wheat initially was supported by the USD data. wheat remained supported by strong export demand as well, which came off that report. At the moment, you can see a bit of a pullback. Ultimately, wheat is still moving quite well, just between support and resistance. So any sort of major rejection candles which form around the 455 zone, we will be interested in the buy at that level. So we're looking at that, just also supported by data too from the USDA report and any revisions of that. But at the moment, we do like the grains ultimately for more upside, although we could see some short-term downside for soybeans and also corn, possibly even wheat. Wheat and possibly even corn as we head into the US session and tomorrow's session. But then as we head into next week, we do see for a swing trade more upside potential. Okay, also have coffee on your radar. So coffee has now pulled back quite significantly. It was overdue a healthy correction. It has had quite a significant correction actually, but previous resistance has now turned into support around the 120 level. So I will be looking at this as a buy opportunity around this level, but to be confirmed. I really need a break and a close above yesterday's high here in really order to get a move on to the upside here for coffee. So I'm keeping an eye on this for a potential long opportunity. Had a huge breakout, really a runaway trade earlier on in March here. Now we've had a healthy correction, and I would like to see some evidence that this price structure here will be supported. If so, it gives us an opportunity to springboard here to higher prices. So that is what we're looking at in terms of commodities at the moment. Sugar also had a very similar pullback as well. For those of you who trade sugar, as I mentioned, we also had a sell short on sugar. Let me just bring that out. You can have a look at sugar. The overall price structure at the moment of this market has been good here, as we saw you can look at this on the weekly. You can see nice rejection candle develop. We've had this is a nice rollover formation, V-shaped reversal pattern. So that has broken down nicely, and it looks like currently sitting near the 1450 level. Would like to see one last move lower here. You can see you've got a neckline just below here on sugar. If you trade sugar, it's a really nice market, tight spreads. 1444 is the next key level really to break down below. If we start to break below that level, you can see this nice V-shaped reversal pattern could start to get a move on. The neckline ultimately a break and close below that. I'd see a nice wave lower here for sugar as well. So just keep an eye on that if you do trade the softs as well. Okay, good. So what I'll do, guys, I just go through a quick summary again of exactly what we're looking at as we go into the US session today. Again, that's just sugar there. So let me bring it back to my other charts. Okay, ultimately on gold at the moment, gold has broken out of a downward trending channel. The FOMC minutes were supportive for price structure. It's still got more work to do in order to really get more bulls interested. But the SPDR Gold Trust inflow of funds that we've seen for the first time in 2 weeks yesterday is starting to make this very interesting. So we could see further follow through. Again, markets could be jittery ahead of the comments from Janet Yellen later on, her speech later on this evening. So that could have another impact on gold here. If it does hold above this resistance channel, if it gets above 1240 to 1245 zone, if it breaks and closes in that area, we'll start looking at this for the next leg up here. If it can do that, if it doesn't, if this is a false breakout and we see the US dollar follow through today, we could see just a retracement and ultimately close back within this downward trending channel and rotate lower again. So really we need a little bit more confirmation. At the moment, following oil very closely, I think it could give rise to another setup this afternoon. If it does continue to pull back here and we start to see fresh selling again, we could see a rotation back down towards the lower end of the trend channel. So have both Brent and light sweet crude oil definitely on your radar. US dollar index, want to see if that follows through, or we close with a very strong rejection candle today, possibly a falling wedge formation. For those of you who like trading falling wedges, that is starting. It's when the price structure gets closer and closer, you get these trend channels and ultimately they cause big breakouts to the upside. So if that does really follow through, here's the opposite here. You've got a rising wedge formation here with the US dollar. Okay, so that's where you're getting tighter and tighter price structure, and then ultimately when we finally had a resolution, huge move there. So we've now got the opposite of that, a falling wedge formation, I would suggest. So let's see how that fully forms over the course of the US session today. Ultimately, gold definitely have on your radar. Oil, I want to be monitoring that very closely today. US dollar index as well. We've got positions on the agricultural markets already, which we're just continuing to manage. So hopefully that gives you a nice little summary of what we're looking at as we go into the US session this afternoon. Of course, if you would like to access exclusive daily commodities analysis, live trading ideas ready to implement from the Gold and Silver Club on a daily basis, you can become a member of the private members live trading room. Very simply, once you become a member, you get access to the following. The private members live trading room includes exclusive weekly live trading room webinars, live trade setups ready to implement, real-time trade notifications. You get exact details of where we're entering, exiting, placing stop losses on each of our trades. So we show you exactly what we're doing on our trades. Essentially, it's very transparent. Live interactive Q&A via weekly webinars, week ahead market focus video and trade watch list as well. Get a personalized trading plan tailored to your trading goals, access to ongoing mentoring and support, and of course institutional level trading research and market insights. So if you would really like to take your trading to the next level, or if commodities trading is something that you would like to look into, maybe you're good at trading forex or equities, or you would just like to learn how to trade the commodity markets, do get in touch. Very simply, you can get in touch with us via either our website, which is www.jointhegoldensilverclub.com. Membership is by application only. Again, just www.jointhegoldensilverclub.com. I'll leave that on the screen in just a second. Also, with any questions you've got, do just contact us at our local offices there, whichever office is closest to you, either our UK office on 0207 193 0403, our US office +1 646 808 0403, our Africa office +27 11 083 8403, or our Asia office +852 8191 0403, or just take a note of those numbers for later on if you want to give us a call a little bit later on this afternoon. Please do go ahead and do so. Okay, so those are our office numbers. And again, yeah, if you would just like to make a straightforward application, it's just www.jointhegoldensilverclub.com. Okay, fantastic. So with that, guys, I wish you all good trading this afternoon. We'll definitely look forward to speak to you very soon. We'll speak to you on the next one, and look forward to hear from those of you who will be joining us at the Gold and Silver Club. Really look forward to working with you. Okay, thanks, guys. Have a great one, and we'll speak to you real soon. Cheers. Thank you. Bye-bye.